Hey traders, it's Stephen Brooks, and today we're going to be talking about monetary and fiscal policy and what impact that might have on not only the economy during this recession, but also in the stock market. Now, these are very much separate things. Monetary policy is done by central banks, the Federal Reserve, lowering interest rates, providing more liquidity to overnight repo operations, buying other products such as mortgage-backed securities, and fiscal policy is what comes out of our government in terms of what might happen in terms of loans, businesses getting money, etc., etc. Right now, the interesting thing is right now during this recession that we're currently in 2020, which is so much different than what happened in 2008. It's unbelievable. In 2008 and 2009, the last financial crisis we had, the market peaked right around the fall in 2007. And from the fall of 2007 until the lows, which was in March 2009, of course, the S&P 500 was down about 50%, but that was about a 16-month period. That's a pretty big period. One of the reasons why the selling pressure continued for so long is because monetary and fiscal policy both kind of took their sweet time happening. What we're seeing today in this financial crisis in 2020 is monetary policy is happening very quickly in a very, very big way, and they're not wasting any time implementing it. Central banks and the Federal Reserve in the United States has already implemented insane amounts of monetary policy that are very beneficial to not only equities and stocks, but also to the average person. Interest rates are cut to zilch, so companies can borrow money basically for free right now. That's a great thing. There are other assets that are being purchased by the Federal Reserve that are also helping businesses and other mortgage-backed security products. Fiscal policy, something that just happened today, is also looking very good right now. In 2008-2009, the big fiscal policy done by our elected officials was $800 billion. What they just did today was they passed a $2 trillion fiscal policy, whatever you want to call it, with more to come if things continue to go south. So what I want to talk about is what these are really doing, what's happening in terms of monetary policy, and what's happening in terms of fiscal policy, and its impacts on not only the market before and after the crisis, but also on the economy before and after this crisis. The big thing that you always have to be on the lookout for is the unemployment rate. This is the big thing that you always need to look out for, is the unemployment rate. Why do I say that's the big thing that we have to look out for? Because 70% of the GDP in the United States is based off of consumer spending. So of course, the higher the unemployment rate, the less spending that there's going to be, and the lower the unemployment rate, the more spending there's going to be. So the big thing that we always kind of want to try to tie things back to in terms of its economic impact is that unemployment rate. So can monetary policy help that? Kinda. Big institutions, big companies, they can borrow money directly from the Federal Reserve at no interest right now. But the problem is they kind of have to pay that back at some point. So although monetary policy can help by reducing interest rates, by providing liquidity in certain repo markets and certain mortgage-backed securities and fixed income markets, it can't really do too much in terms of unemployment rate. But fiscal policy, and especially the way our elected officials just did, can absolutely do that. Right now, they're talking about giving loans to small businesses and those loans turning into grants if no one gets fired, if you don't lay off anyone. That is incredible, and that's also unprecedented. And of course, if I'm a business, and right now I'm struggling and I have 10 employees, if revenue's coming down, the first thing I'm going to do is try to cut my expenses as well. But what just kind of got passed here by Congress is, hey, they will give me a loan that is more or less equivalent to what that payroll is, what my rent is, what utilities is, and if I don't fire anyone, that loan becomes a grant. That is unbelievably positive. That is incredibly positive. Now, that doesn't mean that no one's going to get fired during this crisis, but what it does mean is the unemployment rate will probably be lower at the end of this fiasco than it otherwise would have been if these measures didn't happen. So when I look at this and I say, okay, monetary policy is really, really accommodative right now. It is. It's the most accommodative it's ever been in the history of the United States. Fiscal policy, I mean, these Democrats and Republicans in the United States hate each other to death, but they're working together right now and they're passing some pretty good stuff. Right now, fiscal policy is really good in the United States. But how much of an impact is that going to have on the crisis that we have today? My guess is pretty little. And the reason I say that is because it is very rare in this country to have business go from 110% to zero in a span of 2 weeks, which is what we just saw with the coronavirus, okay? The only real other time that happened in the history of the United States was basically at the start of World War II. And what happened when that happened was the stock market closed down for a few months. It hasn't closed down now, and it's unlikely to close down now, but it's been very, very rare that we went from operating at a very, very high pace in terms of our economic activity to almost zero in a very small period. That is unprecedented for the world, and especially the United States. So it's really unclear how monetary and fiscal policy might be able to do that, might be able to help that, where stores are closed, businesses are closed, people are tightening up their wallets because they're concerned about potentially losing their job, or they don't want to spend money because who knows what's going to end up happening here. But for me, the biggest impact with monetary and fiscal policy is going to be on what happens after the crisis, when this virus is kind of behind us, that type of thing. And one of the things that I'm excited for, but also a little bit concerned about, is the Fed is pumping in trillions of dollars into the marketplace. Congress is going to pump in trillions of dollars directly to the economy. What that's going to end up doing is that's going to create a lot of pent-up demand. People are going to have more money than they otherwise would have been. Again, if you're an employee of a business where you otherwise would have been let go in this situation, but because of what Congress did, you're not going to get let go. Again, you're going to have more money throughout this crisis than you otherwise would have had if you ended up getting fired if the government didn't pass what they just did. So I think that people are going to have more money because of what was passed than they otherwise would have, which might not help them today, but it's going to help them get back to 100% way faster, way faster than if these measures were not already passed, which by the way they have. And again, sitting here today is very impressive what our elected officials and our unelected officials over here with monetary policy have done. It is. So to me, the only thing that can really help us in terms of this virus and what's going on now is on the health side. To me. Again, I could be wrong. This is just my opinion. But to me, the only thing that could really help us in terms of what's going on now is the health stuff. Do we have a vaccine? Is it definitely going to go away in the summer? Maybe way less people than we think have it. Maybe more people, whatever it is. Once we get good news on the health front, I think this thing will start to really sort itself out. But I don't know if monetary and fiscal policy can really help us now. To me, they're more going to help us after the fact. But one of the things that I'm slightly concerned with, that I'm going to be keeping an eye out for, is right now, if businesses are closing up right now, people are getting let go. Right now, prices are coming down. Okay, prices are coming down because people basically are a little bit tighter on their wallets, and some people who've already been laid off have less money. So prices are going to end up coming down. If you load up the economy with trillions and trillions of dollars, what's going to end up happening is, again, more people are going to have way more money than they otherwise would have been on the other side of this crisis. And what's going to end up happening is you might get an uptick in inflation. Inflation means prices are going higher. So milk at the store, food on the shelf is going to cost more money. That is a likely outcome here, but we're going to have to wait and see what ends up happening. So the monetary and the fiscal policy stuff is really interesting, but to me, it's going to give us more of a benefit after this crisis is over as opposed to now. I'm still looking at the health stuff to figure out when we might have turned a corner here in terms of this crisis, but the stuff that's going on in the monetary front and the fiscal stuff is unbelievably positive, especially where we are with politics in the United States. It's impressive and it's shocking that we've been able to do this. I don't think it helps us too much now during this crisis. I only think the health stuff can help us right now during this crisis. But at the same time, folks, I do believe that after, on the other side of this, whether it's 2 months from now, 6 months from now, or a year from now, people are going to have way more money in their pockets than they otherwise would have, mostly because of these fiscal measures here. And what that means is the damage done to the economy is going to be far less because these measures have been put in place than otherwise. So for me, that's going to give us a big boost after the fact, because more people are going to have money than they otherwise would have. But the one thing that we're going to have to be cognizant of is, what does that do for inflation? If we flood the economy with trillions and trillions of dollars, it only makes sense that prices might go up. So again, monetary and fiscal policy, to me, are only really going to be helpful after the crisis. The only thing that can really help us now is on the health front. But after the crisis, people are going to have more money than they otherwise would have because of these fiscal measures. And the one thing you'll have to take a look out for is, although people will have more money, people will be taking those vacations, people will be going on airplanes, people will be going to restaurants, people will be going to sporting events, all that stuff. The one thing you'll have to be looked out at that point is, what does that look like for inflation? Otherwise, again, the monetary and the fiscal stuff is great, but to me only really helps us after the fact. We're still looking at the health stuff to be able to gauge when we might be out of this scare that's going on right now.